short trading video, we're going to discuss the two most commonly traded crude oil contracts. We're going to talk about what months they're traded. We're going to discuss the contract specifications, and then we're going to talk a little bit about how to trade them. So the first thing is there's two main contracts. There's the CL, which is the big contract, and it trades all of the months. And then there's the QM, which is the mini. Now, as you can see right here on my chart, I've got at CL, that's the at Globex symbol for crude oil, and it trades all of the months: January, February, March, April, May, June, July, August, September, October, November, and December. If you don't know your symbols for your months, hold on, I'll grab a little cheat sheet for you. So here is a little cheat sheet, and most brokerage firms will give these to you. You can see crude oil trades CL. It trades all of the months. Here's the open and the close time. Down here's where you're looking at January, February, March, April, May, and here are the symbols: F, G, H, J, K, M, N, Q, U, V, X, and Z. I have no clue who came up with the symbols, but anyway, that's the ones that you need to know about, and that trades the CL and also the QM. So the E-mini and the big contract trade all of these months. Now, you'd also need to know how they trade. So what are the contract specifications? Now that you know they trade every single month, how do they actually trade? So on CL, you can see that it opens up at 6 p.m. and closes the next day at 5:15 p.m. On the big CL contract, it's $1,000 a point. Every penny it's a minimum move of 1 cent is a tick in crude, and that one cent move is worth $10 to you. Now, if you compare that to the QM, which is down here, QM, you can see it opens up at 6 and closes at 5:15 the next day, so it's only closed for 45 minutes. It's $500 a point. A minimum move is 2.5 cents, and that tick is worth $12.50. Now let's discuss a couple of strategies to trade these things. So I trade the big contract, the big CL. One reason is it just has a lot more volume. So right now it's actually a light volume day, and it already has 120,000 contracts, and the QM only has 3,191 contracts. It depends on what you're trying to do, but right now we're looking at a daily chart, zoomed in here on a daily chart of crude, and at the shooting time of this video, support on a daily seems to be 95 to 93, and resistance seems to be 101 to 103. All right. The average true range for crude on a daily usually is anywhere from $2 to $4 in that range. So we're already at $1.35. The trading personality of these markets, crude tends to trend really well until it gets up to its average true range, and then it'll stop and then come back a little bit. They trade differently than, like, say, the S&P minis, but they have both components, a trending and a non-trending component, depending on where they are in their range. So in this example, I'm going to show you a live example of a trade. We've got a little bit of resistance up here around 100 even, and now I'm on a 1 minute chart to 98.88, and we are jumping up here, bouncing up. So I'm going to show you what it looks like to trade on a one contract here. It's the smallest size you can do, and I will enter the market with a sell order, and now you can see my stop is 10 ticks above, and then I'm going to take off auto center, and you can see that my target is 30 ticks below. So that's the price action. You can kind of see how it acts personality-wise, how it's jumping up and down. I don't like to risk a ton of ticks on crude, anywhere from 10 ticks to 30 ticks as far as risk, and I'm looking for a profit on the downside. So that's how you look at trading crude oil futures. For more information and more videos just like this, there is a link below. Click the link and we'll send you more free videos just like this one.